Happy Monday, tech investors. Welcome to the Tech Stocks Daily Podcast, where we sift through the digital gold for the latest market buzz and juicy insights. Today, we've got a tech trifecta that'll hook you in from the get-go. First up, Microsoft's gearing up for an earnings report that's got analysts on their toes amid a slight dip in stock price. Then, we're diving into the drama of billionaire Bill Ackman's bold $1 billion takeover bid for Howard Hughes. It's a real estate roller coaster you won't want to miss. Finally, we'll unravel Meta's shakeup in content moderation that's keeping advertisers on their toes. Plus, there's spicy action brewing in the crypto world with Hut 8's latest investor plays. So grab your AirPods and settle in for the latest buzz and tech stock wonders. Hey tech lovers, ready to dive into all things Microsoft? It seems like today is all about this tech giant, and we've got a heap of fascinating insights to share. Let's begin with Microsoft's stock performance, shall we? Market dynamics were at play, leaving Microsoft stock dipping slightly. It fell by 42% to wrap up at $470.19, while the rest of the market had its own simmering pot moments, with the S&P 500 seeing a 0.16% rise, the Dow climbing higher with a gain of 0.86%, and NASDAQ sliding down a bit by 0.38%. So Microsoft wasn't alone in its struggle, but it did show weaker performance than these key indices. As we zoom in on what had investors whispering about Microsoft today, their upcoming earnings report due on January 29, 2025, is one highlight. Analysts have us on the edge of our seats with a prediction of an EPS of $3.13, which would be an almost 7% leap from last year. Total revenue figures are estimated to rocket up 10.86% to hit $68.75 billion. Full-year forecasts suggest earnings per share of $12.92, while annual revenue climbs to $277.69 billion, numbers that mark solid gains over the previous year. For those tracking tech stocks, Zacks Rank has cast Microsoft with a number 3 rating. Though not in the strong buy camp, this rating still marks a confident hold on your portfolios. The company is also nestled currently within a slightly pricey forward PE ratio at 32.42 compared to its industry peers averaging a 30.41 rating. Now about those peculiar options activities, they were all over today's buzz. Our friends at Benzinga picked up 118 unusual options trades linked to Microsoft. What's clattering the keyboards? It looks like there's a blend of pessimism and optimism in the air among the investors. 36% are feeling bullish, while 45% have taken a bearish stance. Does someone have an insider telescope, or is it just us? Popping quizzes aside, professional analysts weighed in with their predictions for Microsoft's future price points. Price targets dance between $515 and $550, with buy and overweight ratings galore from investment giants like Loop Capital, Stifel, UBS, and Piper Sandler. Finally, let's explore Microsoft's standing in the software realm. Microsoft is performing some nimble acrobatics in terms of financial metrics, PE, PB, and PS ratios, and those promise nuggets like undervaluation or overvaluation. But one insight shines: Microsoft's fiscal stability outshined its competitors in debt-to-equity assessments. A reminder that steady financial legs can help you stand tall. Before we sign off from this Microsoft montage, remember none of these market movements occur in isolation. Stay sharp and be on the lookout for lightning bolt alerts and analyst musings that sway stock narratives day by day. So there you have it, a compact yet incisive glimpse at Microsoft's performance, market activities, investment projections, and its steady gallop in the tech arena. Now go forth, tech vanguards, and stay ahead of the curve. Strap in, tech enthusiasts, because today we're diving into a slice of real estate intrigue with a touch of billionaire pizzazz. So what's the deal with Howard Hughes Holdings making waves in the stock world? Well, it's all thanks to Wall Street's own Bill Ackman, a billionaire with a flair for making dramatic financial moves. First, a bit of background. Howard Hughes Holdings, which you could amusingly describe as the real-life Sim City, is a developer of sprawling master-planned communities including the Woodlands in Houston and the Summerlin area near Las Vegas. This company captured Ackman's interest all the way back in 2010 when he led its spin-off from General Growth Properties. Fast forward to now, and Ackman holds a commanding 38% of Howard Hughes, essentially a lion's share of investment patience marinated over nearly 15 years. But here comes the kicker. Despite Ackman's sizable contribution to steering the Howard Hughes ship, its financial returns haven't exactly been of Tesla-like proportions. With a total gain of around 108% over a decade and a half, the stock's annualized performance has been a paltry 5%. Clearly, this sort of ROI isn't enough to buy Ackman a mocktail on the hedge fund yacht vacations. Enter the takeover bid. Our financial protagonist Ackman has decided it's time to spice things up by proposing a $1 billion deal to snatch up the remaining shares of Howard Hughes Holdings that he doesn't already own. Now don't go imagining a Shark Tank episode here. Ackman's isn't just making random offers. He's all set to roll out a fresh subsidiary from his hedge fund, Pershing Square, to merge with Howard Hughes. The enticing sweetener? He's offering $85 per share, a seductive premium above what the stock was floating at before. As you'd expect, this news sent Howard Hughes stock catapulting upwards by around 11%, not bad for a Monday. What made investors swoon further was the choice Ackman is offering, a potential full payday in cash, or a chance to join him on the post-merger adventure with stock options. Choices, choices. Sure, Ackman acknowledged that the stock's past performances haven't exactly won Wall Street Oscars, but he's banking on those master plan communities continuing to develop in their magnificence. Importantly, he reassured everyone that the Howard Hughes way of life remains unshaken. No massive layoffs, no upheaval of the management team, just a bit of spicy financial restructuring. It's like giving the whole board a trophy and then kindly pointing out the dust on it. So, there you have it. Bill Ackman, financial mogul with diamond hands, has just chartered a new course for Howard Hughes. Whether you're a stockholder with dreams of cash or a tech fan just tuning in for drama, it seems Howard Hughes is a classic case of a real estate reality show, and it's captivating a whole audience of investors. Isn't tech lovely? Hey tech enthusiasts, let's dive into some sizzling Meta news. Hold on to your VR goggles because it's quite a ride. Meta Platforms was really lighting up the headlines today, and not just because Zuckerberg's metaverse dreams involve impressive VR spectacles. Two juicy stories are making waves, so let's unwrap them. First up, Meta's recent shakeup in content moderation has advertisers feeling like they're on a roller coaster. Mark Zuckerberg announced changes echoing Elon Musk's community notes strategy, which raised not a few eyebrows. Yep, it's all about that free speech vibe, as Zuckerberg expressed intentions to revert Facebook and Instagram to their roots. But here's the kicker. This direction aligns closely with US President-elect Donald Trump's philosophies and that of Elon Musk. Zuckerberg even had a powwow with Trump and swapped around key figures, including appointing Trump-aligned figures like Joel Kaplan and Dana White to vital roles. Advertisers who contribute to a massive chunk of Meta's $135 billion in annual sales are biting their nails. They're worried this might become a breeding ground for harmful content and misinformation without professional fact-checkers. It's like swapping out your robo-security system at home with a community-built one from scratch. You never know what you've signed up for. Second on today's news list, Meta's taking center stage with a frank comparison to its industry competitors. We're talking about its massive empire: Facebook, Instagram, WhatsApp, and Messenger. Meta's a juggernaut in the social media realm, boasting nearly 4 billion active users. The financial analysis is quite revealing, placing Meta as a force to be reckoned with, even though some numbers suggest it could be overvalued compared to peers in the interactive media and services industry. Meta shines in profitability. Its return on equity rises above the average, demonstrating efficient equity use for profit generation. Meanwhile, despite venturing into Reality Labs' forays, they remain a small chip in the company's colossal revenue radar. Investors might find Meta's stock undervalued in terms of the price-to-earnings ratio, but a bit overvalued from the price-to-book and price-to-sales viewpoints. Adding puff to this investment tableau, Meta has lower debt-to-equity compared to its principal rivals, making it a financially sturdy player in today's corporate Hunger Games. Wrapping it up, Meta seems like a mighty titan dancing in both controversy and achievement. Its next strategic moves, especially regarding content moderation, will be key in either squashing advertisers' worries or affirming their fears. And meanwhile, its formidable market position only becomes clearer with each fiscal analysis. So no matter how you slice it, Meta's making sure the world keeps watching, advertisers crossed fingers and all. Stay tuned for more digital drama as it unfolds. All right, tech enthusiasts, let's talk about what's happening this week in the crypto mining world with Hut 8 Corp, trading under the NASDAQ ticker 2. It seems like everyone's buzzing about them, and for good reason. From heavy-hitting investors making moves to analysts reinforcing their bullish outlooks, it's a pretty spicy topic. First up, some deep-pocketed investors are showing mixed, yet major interest in Hut 8, with a significant tilt toward a bearish sentiment. Benzinga's options scanner came through with a big reveal. We're seeing substantial activity with 11 unusual options trades popping up over the last month. The data shows large bets both ways, with about 63% of these options traders feeling a bit bearish and 36% keeping the faith with a bullish stance. That's like having pineapple on pizza at the party, a controversial topic. These options give us a window into the anticipated price movement. Tense moments indeed, as whales seem to have targeted a range between 20 and 37. That indeed sheds some light. You don't move with such stealth unless something big is on your radar, right? Next, shining a spotlight on the analyst's take. John Tadero from Needham is steering clear from the cautious crowd, maintaining his strong buy rating alongside a $38 price target for Hut 8. What's got him so excited, you ask? Well, Hut 8 is not just mining Bitcoin. They're diversifying like they're an all-you-can-eat buffet of digital assets. They're looking to boost mining margins and improve efficiency while kicking off huge projects such as a Louisiana data center. Fancy tech, long-term strategy, and keeping costs down? Sounds like a win to me. Analysts expect that by 2025, Hut 8 could make some serious advancements. From lowering energy costs, pushing fleet upgrades with efficient miners, to leveraging operational efficiencies. These guys aren't sitting around. Nope, they're hashing out improvements and considering significant expansions, including a possible lease agreement on a massive data center that might rake in around $400 million in yearly revenue. While today saw Hut 8's stock price take a jog lower by about 6.71% to 21.83 cents, analysts are positioning this moment as a stepping stone to what they think could be more fruitful endeavors and significant revenue jumping jacks in 2025. Now here's where you guys come in. What do you make of all this? Are you team bullish or team bearish on HUD 8? Are these data center plans enough to make you a believer? Or are you holding on to your skepticism? Share your thoughts in the comments below. I want to know what you're thinking. Are you going to dig deep and go super bullish? Or are you shrugging off the hype? That's your roundup for today. Stay sharp, keep inquisitive, and keep those comments coming. Let's chat about what this could mean for the future of digital mining stocks like HUD 8. All right, tech wizards, let's take a deep dive into Microsoft and figure out whether it's time to buy, sell, or hold. Remember, what I'm about to dive into is just my take, and you should always do your own research before making any financial moves. Looking at the current news and analysis, we see Microsoft is facing a slight dip in stock prices, a modest 0.42% decline in its latest trading session. Despite this, it's crucial to note we have a juicy anticipation from analysts predicting a robust earnings report on the horizon for January 2025. Wall Street's crystal ball guys are forecasting an EPS of $3.13 and a whopping bump in revenue to $68.75 billion, portraying nearly a 10.86% surge from last year. These expectations alone can build a good base of optimism about Microsoft's growth trajectory. Moreover, even though the Zacks rank is showing a solid hold verdict at number 3, implying cautious optimism, Microsoft's forward PE ratio sits slightly above its industry peers but isn't far alarming. Frequently, this means investors might pay a premium for what they anticipate could be a significant financial upside. The company also boasts strong fiscal stability, with a remarkable standing in debt-to-equity assessments compared to its tech counterparts. This underpins its resilience and ability to stay on sound fiscal ground amidst industry fluctuations. Regarding options activities, we see both bullish and bearish sentiments. However, an intriguing amount of professional analysts project a potential high ceiling, setting bullish price targets between 550 and 550. So if you ask me, this shows that there's more room to potentially ride some waves and realize gains if market sentiments align with the strategic earnings and revenue streams forecasted. My gut leaning from today's stir of news would suggest holding Microsoft stock. It seems the safe call at the moment until that earnings report drops, revealing if predictions hold water. Keep a close eye on further developments surrounding their financial performances and marketplace trends. Remember, folks, tech is dynamic, and market behaviors have a knack for going rogue. So maintain a diversified portfolio and lean on analytical insights. Dive deep into your research game before making any moves, and keep your investment strategies sharp and tailored. Wow, what a whirlwind of activity on the market today. We saw Microsoft stock taking a small dip amidst general market fluctuations, all while gearing up for some potentially exciting earnings forecasts. Over at Hughes Holdings, Bill Ackman's takeover bid spiced things up, sending investor interest soaring. Meanwhile, Meta's strategic pivot in content moderation had advertisers nervously adjusting their strategies, while HUD 8 was generating buzz with heavyweight investor activities in the crypto mining world and intriguing prospects ahead. If you enjoyed this tech gossip as much as I did, don't forget to give us a thumbs up, subscribe, and spread the love by sharing with your fellow tech aficionados. Remember to join us again tomorrow for another round of tech news excitement.